Alphinity. I'm the Client Portfolio Manager at Alphinity Investment Management. Today I have Archibald with me. He's one of the analysts in our global equities team, and today we will be talking about one of the sectors that he's specifically been looking at, technology. So Ty, there's a lot to talk about in technology and a lot of underlying themes and trends going on. Give us a bit of a top-down view. What have you seen so far this year across those subsectors of the technology sector?
Yeah, I think what we're really seeing, Elfrida, is sub-themes starting to play out, particularly in the hardware space, and that's basically driven by bottlenecks in the components needed to build out the AI infrastructure, which is driving pricing higher and really leading to shortages where demand is far outstripping supply. So I mean, some of these industries were largely seen as lower priority on the procurement list, commoditized businesses, and they're now really rising up the ladder of importance for their customers and becoming mission critical. And a couple of those are memory, storage, and optics as well.
Yeah, and as we've seen these themes develop, we have obviously also tilted our portfolio a bit to some of those earnings winners. Can we pause a bit just on memory and tell us what is your sense there and what exposure do we have?
Yeah, absolutely. Well, I mean, simply put, AI generates and consumes an enormous amount of data.
Yes.
And with that, you need an equivalent amount of memory to support it. So within that, there's Micron, which is a world leader in memory and flash storage. And so what we've seen play out in the last results is, because demand is outstripping supply so much, the pricing on some products is increasing over 80% within a 3-month window. And in fact, some estimates suggest that the US hyperscalers this year alone will spend up to close to 30% of their operating cash flow on memory. So it shows just how important it is and the severity of the shortages within that market.
And we've of course all seen it come through in all the Apple devices that we all have or want to have.
That we want to buy but can't.
Yes, exactly. And let's pivot to the power side. Obviously, huge amount of data requiring a huge amount of memory and computing power, but also electricity, power. What have you seen in that space?
Yeah, and just like with memory, I mean, more data means more memory, and it also means more power generation to support that.
Yes.
So we think about Infineon, which is a German-listed leader in power management semiconductors. So its products essentially convert, regulate, and distribute electricity. And simply put, the higher the energy requirements, the more demand for Infineon products. And similar to the memory sector, they are experiencing severe supply shortages for their products. So that's helping their pricing and driving utilization rates really high for them as well.
And one of the other subsectors that's really been in the news this year, firstly on AI disruption risk, and more recently a few others, that would be the software side. Tell us what you're seeing there and what is more recently been playing out in that space.
Yeah, I think up until a couple months ago, software broadly was a one-way trade, a negative trade at that, as incumbents really grappled with the narrative around AI disruption. We're also seeing some sub-themes really start to bifurcate that market as well. And what we're seeing is there's still the AI loser bucket, which is the traditional software as a service companies. But there's some winners coming through there where the market is giving some credit to those companies that are seeing a revenue acceleration from AI, and that's specifically within the data infrastructure and observability piece, so companies like Snowflake, MongoDB, and Datadog, and also cybersecurity, where the newer LLM models are seen as a risk and enterprises are rushing to shore up any security gaps they may have. So that's been a recent change within the software sector broadly.
Fantastic. So with all of that being said, a lot of underlying themes and trends, how are we currently positioned in the portfolio in this space?
Yeah, absolutely. Well, We are always focused on capturing underappreciated earnings in companies we believe where earnings can outpace the broader market expectations. So as a result, some of these companies are experiencing a generational demand opportunity with significant earnings drivers. So we have exposures across them, but like always, we want to maintain a balanced approach, measure our position size, and also balance that across not just the tech sector, but broadly across other sectors in the portfolio as well.
Well, fantastic. Thank you, Ty.
Thanks, Elfrida.
Thank you for listening. For more information from Ty and the team, please visit us on alphinity.com.au. Thank you.